Hi friends, we will continue with the topic which we were discussing, provision for bad debts. In this video we will see a problem where the provision for bad debts already existing in the trial balance is in excess of the requirements of the business. So we are having a provision for bad debts which is in excess of the requirements of the business. So what do we do? What do we do with that? We are given a problem here. Extract of a trial balance on 31st March 21 is given. Debtors is showing a debit balance of 20 lakhs 40,000. The provision for bad debts is showing a credit balance of 2 lakh and bad debts is showing a credit balance of 60,000. So to meet this loss, we already have a provision for bad debts. Let us see the adjustment. This is only an extract. It's a part of the trial balance. We are trying to learn how to deal with various adjustments given in a final accounts problem. Adjustments. Write off further bad debts of rupees 40,000. Maintain provision for bad debts at the rate of 2.5% on debtors. So what the problem is asking you to do is, it is asking you to write off further bad debts. That means whatever is given in the trial balance, apart from that, another 40,000 has to be written off, and you are required to maintain provision for bad debts at the rate of 2.5% on debtors. Okay. So let us start solving the problem. This is the profit and loss account for the year ended 31st March 21. Balance sheet as on 31st March 21. Bad debts account. Provision for bad debts account. Let us see what's the balance given to you. Debtors. The balance given to you, debtors shown in the balance sheet asset side is 20 lakhs 40,000. Bad debt 60,000. There is already a debit balance of 60,000 in the bad debts account, brought down 60,000. This cannot be transferred to the P&L account because there is already a provision for meeting this loss. Brought down, there is a balance of 2 lakhs in the provision for bad debts account. These bad debts will not be debited to the P&L account, it will be debited to the provision for bad debts account, because to meet this loss in the earlier years we have set aside some profits to meet these losses. Let us see what is given in the adjustment. Write off further bad debts rupees 40,000. We have to write off few more amounts as bad debts. Bad debts account debit to debtors 40,000 rupees. So I'm writing off some more amounts as bad debts. So bad debts account will be debited. I'll write here to debtors 40,000, and this amount has to be subtracted from debtors because this is shown outside the trial balance. We have to write them off further. Apart from what is given in the trial balance, this amount has to be written off further. So 40,000 will be written off. The balance amount is 20 lakhs. Now the question arises, what do I do with this loss of 60,000 and 40,000, 1 lakh loss? This loss has to be transferred to the provision for bad debts. I close the bad debts account by writing by provision for bad debts here 1 lakh. I'm passing the entry provision for bad debts account debtor to bad debts. So in provision for bad debts, I'll write 2 bad debts 1 lakh. With this account gets closed. I'll write down the entry for the sake of convenience. Provision for bad debts account to bad debts. 1 lakh rupees is transferred to the provision for bad debts account. So with this account will get closed. Now how much is there in the provision for bad debts account? 2 lakh minus 1 lakh, there is a balance of 1 lakh. But what is the question asking you to do? It's asking you to maintain a provision for bad debts at the rate of 2.5% on debtors. So debtors is showing a debit balance of 20 lakhs and we have to maintain a provision of 2.5%. So I'll write here. Calculation of amount to be debited or credited to P&L for maintaining provision for bad debts. Debtors is showing a debit balance of 20 lakhs. Total provision required to be maintained. Total provision required to be maintained. It is at the rate of 2.5%. That will be 50,000 rupees. This is the amount I am required to maintain. Less already existing provision. I am already having some balance in the provision account. Already existing provision. How do I calculate that? I started with a balance of 2 lakhs and I've used up 1 lakh rupees. So there is a balance of 1 lakh already. So I want totally 50,000, but I already have 1 lakh. So excess provision. In provision account, I need only 50,000, but I already have 1 lakh. So there is an excess provision of 50,000. It is shown in negative. That means this has to be credited to P&L account. So what is entry we pass? We will return the excess provision to the profit and loss account. So we'll pass the entry provision for bad debts account debit to profit and loss account. So the excess provision has to be transferred back to the profit and loss account. So the provision for bad debts account will be debited. I'll write the entry to P&L account here, 50,000. In the P&L account, I'll write by provision for bad debts, 50,000. So the excess amount of provision for bad debts is not debited to the P&L account, it's transferred back to the P&L account. Now what is the balance left in the provision for bad debts? If you see, the total is 2 lakhs. On the credit side, I write the same total here, 2 lakhs. 2 lakh minus 1 lakh 50,000. 50,000 is the balance, carried down 50,000, brought down 50,000 rupees. So this is the amount I am left with, 50,000 rupees is the balance left. So this amount has to be shown in the balance sheet. Instead of showing it on the liability side, I'll write by, I'll say less provision for bad debts, 50,000 rupees. If you can observe here, it is exactly 2.5% of 20 lakhs. So balance 19 lakh 50,000 will be shown on the balance sheet asset side. So in this problem, we have learned how to deal with an excess provision. So here we saw that the total provision required was only 50,000, whereas we were already having 1 lakh. So the excess amount has to be transferred back to the profit and loss account. So I'll say excess provision transferred to P&L. In all our earlier problems, we have been debiting P&L account to maintain the provision. In this problem, the existing balance was so high that it was more than necessary. So the difference amount, the excess amount was transferred to the P&L account. The provision account was debited and P&L account is credited. So this is how you deal with a problem where you have an excess provision. So it is transferred back to the P&L account. Thank you.